and a very warm welcome to Money Control. It is the day after the blockbuster GDP numbers that came out late last evening and beyond nearly all estimates. Clearly, it seems like the economy is pretty much firing on all cylinders. For the fourth quarter of FY23, the GDP came in at 6.1% as against an estimate of 5.1%. For FY23, the growth came in at 7.2%, higher than estimates once again. Agriculture growth is up 5.5%, construction 10.4%, manufacturing 4.5%, trade, hotels, transport up 9%. So is it so often that we see such a divergence in GDP forecasts? Why did the economists get this so wrong, and is this growth sustainable? To discuss this and more, we have with us Mr. Surjit Bhalla, former Executive Director at the IMF, Mr. D.K. Joshi, Chief Economist of CRISIL, and Aditi Nayyar joining me from Delhi, Chief Economist at ICRA. Let me begin with you, Mr. Bhalla. Your first reactions coming in on the GDP numbers yesterday.
As you said, it was a big surprise, though I think the governor had hinted that this number would be coming. So it wasn't as much of a surprise, I guess, to him and to several of us, or some of us, who've been following the Indian economy closely. I think one factor is that something that has happened around the world, and again, the mistake has been made with the US economy, that people have factored in too much of a downturn because of the supply shocks and the inflation that has taken place in the world outside of India. So I think economists are not used to analyzing unusual events, and therefore they are systematically getting it all wrong, both in India and abroad.
Interesting, Dr. Bhalla. We have two economists here with us as well, Aditi and Mr. Joshi. What happened this time around? Why is it that we see nearly 100 basis point difference between the estimates and the numbers that finally came in? Moneycontrol, in fact, conducted a poll of 15 economists, and the upper range was 5.5. So the range was between 4.4, 4.3 to 5.5. What is it that you guys missed? Mr. Joshi, I'll begin with you.
Okay. So I think one was the superlative performance of agriculture. We did not expect agriculture to grow at 5.5%, that too over a high base. So agriculture seems to have dodged all the vagaries of weather and registered a pretty strong growth. So that was one part which we did not anticipate. I think rest is, I think if you take agriculture out, then I think the gap between what we were forecasting and what came out is not that stark. And also, I think one must remember this is the third estimate. You will get the fourth estimate in February 24 and then some estimate in February 25 for the same year. So I think the numbers keep getting revised, and as more information becomes updated. So we were at 7% projection for the year, and 7 and 7.2%. I don't think this is 20 basis point here and there make any difference.
Right. Let me, Aditi, what were your estimates, and would you agree with Mr. Joshi? Is it the agriculture story that somewhere got missed out?
Thanks, Shweta. I mean, certainly agriculture was part of it, and I think the other area where there was a large deviation from our estimate was manufacturing. And manufacturing last 2 quarters had actually seen a contraction in the gross value added, or the GVA. And this is a quarter where it did go back into a growth, which is what we were expecting. But the pace of growth was higher than what we were anticipating. And that's another big reason that that's led to the divergence between our forecast of the GDP and GVA growth and what the NSO has put out. And let's bear in mind that the NSO itself, in its second advanced estimates a couple of months ago, had also forecast GDP, GVA to be in the ballpark of where most of the economists' estimates were. So they've been surprised as well by this upturn. And certainly with all of the issues related to unseasonal rainfall, etc., we would not have expected agricultural growth to be as high as what's come in. And I agree with Dr. Joshi that there is going to be a few more rounds of revision after this, and the final number could end up being a little different. But it's a welcome number. We were anticipating an uptick between Q3 and Q4, which has come in. It's stronger than we expected, which is great. But at the same time, there is still a lot of unevenness in the sectoral growth as well as in the expenditure aggregates. And that's something that we need to bear in mind as well.
Right. I want to come to Dr. Bhalla. Dr. Bhalla, clearly private consumption still continues to be tepid. Do you see that going forward as a growing concern? And is that something that should warrant the government to look at boosting consumption through other ways and make it a priority?
One point on the forecasting, I should also mention that the IMF has also systematically got it wrong. And they were forecasting something like 6.1%. So, what maybe the two other guests can amplify as to how many times is the fourth estimate much different than the third. I can understand the first, second, and third estimates, but I think the revisions down the line are less, but maybe they've examined it more. Now coming to consumption. Look, what has been the big story of India over the last 2-3 years, and we've all been discussing this, it's investment. And therefore, by definition, when you have higher investment, your consumption is going to come out a bit lower than the long run trade growth, or the growth in consumption is not going to match the accelerated growth in investment. But after a lag, after a few months, maybe a couple of quarters, consumption catches up. So I don't think the government needs to do anything whatsoever in order to enhance consumption.
So you don't see it as a concern?
Not at all. I mean, this is normal growth process. You have investment. If you have higher investment, ceteris paribus, all other things being equal, you have lower consumption. So that's where, savings. If I save more, which goes into investment, then I consume less. It's the two sides of the same point.
Okay. Well, others might disagree with you there, Dr. Bhalla. I want to bring in Mr. Joshi and Aditi here. How are you reading into the consumption numbers that came in at 2.8%, which shows that clearly, while there is growth, are we creating enough jobs? Is the growth equal or is it uneven? How are you reading into these numbers?
Well, I think the consumption story is, if you look at the full fiscal year, 7.5% is faster than the overall GDP growth. So actually consumption for the year has grown faster. But once you switch to your glance on the quarterly data, you'll find that it seems to be fading a little bit, I think, towards the fourth quarter. I think there are some cross currents for consumption. I think the inflation did bite into some purchasing power last year. Now that is going to correct, but now what we will see is some impact of rate hikes on interest sensitive segments will play out. So I think consumption I would believe, will be slower than what we saw in FY23, in FY24. So consumption, and then there are other dichotomies in consumption. I think rural versus urban. The urban consumption is benefiting from rebound in services because most of the services are in urban areas. Service employment in urban areas, I think, accounts for 60% of the employment. So that is benefiting the urban areas more than it is benefiting the rural areas. And that gets reflected in consumption as well. And then I think the premiumization of consumption is also another aspect which will get corrected. But right now, I think we do see the stronger demand for high ticket items than compared to low ticket items. I think so. There is the broad basing of consumption is yet to happen. I mean, I think it will take time. I think some of the growth in services sector will spill over to other sectors as well. So we will see this correct. But right now, I think we do see trends of consumption being concentrated and not diversified.
Interesting. Aditi, I want to get in your comments on this. How are you reading into the India consumption story? Is it looking like a K-shaped story to you?
So, Shweta, I pretty much agree with everything Dr. Joshi just said. Consumption growth is very uneven. I think there is a unevenness between the rural and the urban areas. And other than that, even if we look at urban consumption, it's very prioritized towards services and things like lifestyle items. There is consumer durables, especially the lower ticket ones, demand seems to be pretty weak. And that is something that might continue for a little while. Now, in the immediate term, commodity prices have come off. If the impact of that actually goes through and feeds into lower prices of products, that's certainly something that could bump up demand to some extent. And if in general inflation is lower, that is also something that would support the consumption in the urban areas. In the rural areas, the big question mark now is going to be what is the impact of the monsoon? How does all that play out on the Kharif crop which is coming up and the Rabi crop after that? And I do suspect that there may be a little bit of tentativeness in terms of consumption in the rural areas until there is a little more clarity on how this agricultural season is going to pan out.
Fascinating insights there, Aditi. I agree, as in the monsoons will play a very, very crucial role. Dr. Bhalla, for now, it looks like we are going to have a regular monsoon. What are you betting on? Do you think that with the numbers that we've seen in the GDP for FY23, would that also mean a revision in the FY24 estimate? Or do you think that there could be some speed bumps in the growth story and maybe this growth story could peter out as the year progresses?
Well, you made a couple of points prior to this. One was a K-shaped recovery, and what is the evidence for that? And the other point you made is about jobs. Now, regarding jobs, we have the PLFS data, which is now coming out on a regular basis. We have it for the latest quarter for urban areas. So I would just like to know from where I'm getting the result, as per the PLFS data, that jobs are quite robust. But I keep hearing people saying that there are no jobs. So I want to know what is the evidence that there are no jobs. And K-shaped recovery, what you're having in rural areas, agriculture is doing very well. And it's all systematically moving together. So I don't understand this K-shaped recovery. If somebody can enlighten me, I would really appreciate that. Now coming to, look, I think monsoons are having less and less effect, and this is a long-term process on Indian GDP growth. So therefore, I don't put that much store in whether unless it's a real drought here. I think concentration on what the monsoon is going to do is not going to help you forecast either GDP growth or welfare. So given barring an extreme shock on monsoons, and I don't think that's any evidence from the meteorological associations that is happening. So in terms of the visions, I think investment, the first rule of economics, at least is on forecasting growth, is investment. If you look at what has happened to investment, whether private or public, that really is not so relevant. Total investment has really galloped ahead. And infrastructure investment in particular has expanded at a very rapid pace. And when that happens, consumption and GDP growth and everything else follows. So I think there are very few bumps in the road, quite honestly. You have to think about the bumps. One is rainfall, but I don't think that's very convincing. More convincing is maybe the world flares up in a war. So I think very few bumps ahead. It looks pretty solid, actually.
So the external sector will not have a huge impact on India, because yesterday even Morgan Stanley in its report said that there has been a lot of decoupling that's happened between India and the US economies. So do you think this is going to play out as we go forward? The global environment might not have such a grave impact, and India could
And
continue to grow
second, not
robustly.
only global environment will not have as much of an impact, but we part of a globalized world. I also disagree with many analysts and forecasters about a global recession and so on and so forth. There's very little evidence other than Germany has gone into recession, technical recession. But really, I look at numbers every day for all the different countries of the world, certainly the important ones. And I think the world economy is in very good shape, actually, going forward, as well as at the present. So we've seen with the US data that it is quite solid. I think some slowdown in the US is happening, but how much of that I don't think is matters, because other economies are now picking up. So I think really one big factor helping India will be that the global growth will be much higher than what was previously expected in the rest of the year.
That's a very optimistic view, Dr. Bhalla, and I do hope that you're right about this, and I'm sure you would be right about this. Let me bring in Dr. Joshi and Ms. Aditi Nayyar here. What are you going back now to the drawing board? Are you all reassessing your growth estimates for FY24?
Well, I think we have maintained our growth at 6%, even with a higher base, which means that we are factoring in somewhat better momentum for GDP. But if you look at, I think I do feel that the global environment will spill over adversely to our exports. Already, I think if you look at 22-23 exports, the merchandise exports grew by 6%. If you take oil out, it is minus 0.5%. So if you have slower growth in 23 compared to 22 in global economy, and that too in our major trading partners like US and Europe, I think China's growth doesn't help us. So I don't see how exports will grow when there is no price effect this year. I mean, the petroleum exports grew by 40% last year. You're not going to get that this year. So clearly, merchandise exports will have to bear the brunt. Already, I think in the data, we are seeing the impact in textiles, and in some of the other labor-intensive sectors. So clearly, I'm not so bullish on our exports doing well. Service exports are a different animal. I think they are about a little over 40% of our total exports, and they have diversified. They are doing well. They are more decoupled, so to say, from the global environment. But goods exports, which form bulk of our exports, are bound to suffer.
So that would drag the economy?
Yeah, it will actually. If exports slow down, I think the manufacturing activity that caters to those exports also slows down. So there is going to be some impact. But still, I think we are maintaining our growth at 6%, which is the highest, which would be the highest in G20, and it's a pretty decent growth in this environment of global volatility and turbulence.
All right, Aditi, I'd like you to come in here. What is your reading for FY24, and do you think that the global economy will weigh on India's growth projections?
Shweta, our baseline estimate for FY24 is also 6%. We are building in a 50 basis points upside if the infrastructure spending from the government side picks up quickly and has a good multiplier effect on pulling in investment across the economy. There's a lot of money that has been put on the table, both in the Government of India's budget as well as in the state government budgets for capital spending. And that is definitely one of the big positives that we're hoping will fructify quickly. And so that's the upside that we have of 50 basis points above our baseline of 6%. If the monsoon is bad and if that has a downward spiral on the rural and the agri economy, then there could be a downside to the 6% as well. As it is, with the higher than expected Q4 agri number, we're sitting on a GVA growth of 4% for the agricultural sector for FY23, which is pretty high. So getting a modest uptick over that, it's going to be a challenging year to really show a very healthy growth in agriculture on top of a 4% agri growth last year, unless we have a very evenly distributed monsoon. So we need to wait and watch for that.
Okay, so you're saying right now that a lot does depend on the monsoon, and of course the global environment too will continue to play an important role. So I don't see the optimism spilling over, at least from the two of you, I don't see the optimism spilling over from these numbers to the rest of the year, but I do see the optimism from Dr. Bhalla. Dr. Bhalla, I want to ask you, if you were to look at this is also a pre-election year, and looking at the way the states are spending today, for instance, front page ads across all newspapers about Rajasthan announcing 100 units of free electricity. We've seen that happening in Karnataka. How much of a risk do you see, with the states coming in terms of their spending, in terms of the freebies getting announced, and that having an impact on the center, because it is a pre-election year for the center as well, and we've done pretty well on our fiscal deficit targets for at the moment?
All the indicators that we have discussed, I think this race to the bottom with freebies is probably the most important and the most damaging to the Indian economy, both this year and more dangerously for the future. So I don't know how we get out of this political race to the bottom. I'm not so convinced that it gets you extra votes, but I'll leave it to the politicians to decide that. But I am worried about this tendency. There are two tendencies actually that I'm worried about. One is the freebies, and the second is not much regard for data, as I have discussed. That in the political season, really accuracy of interpretation of data gets a short shrift. How much that affects sentiment, etc., I don't know. But freebies is very, very bothersome. So you're right to point that out. It is very disturbing, and I hope there will be some corrective measures from where I don't know. But it's something that needs to be looked at and corrected.
Okay, very quickly before we wind up, I want to go across to Dr. Joshi, Aditi, and to you, Dr. Bhalla, on the key risks that you see in this year going ahead for FY24, and what are the things that we need to be mindful of. Also, I want you all to give an assessment of what the RBI could do next week. Would we see a pause in the interest rate hike cycle that we've been witnessing for the past few months? Dr. Joshi.
Well, I think as far as the risks are concerned from the global side, I think we have seen very sharp increase in interest rates in US, and I think the income levels there will go down when GDP growth slows. And when you have interest rate rising, income levels going down, then I think that creates an atmosphere for accidents, I think. So I think you'll have to watch out for financial accidents from US. I think although they are nearing the end of the rate hike cycle, but looks like the Fed is going to keep interest rates high for longer. And then I think, so this we've seen one set of accidents happen, I think, which are not related to consumer delinquency, but I think that could be a case, I think, which one will have to look at. So from the global side, that, and then second is Russia-Ukraine is still not over. I mean, where this war goes, we don't know. I mean, and I think that could be one risk, I think, which we cannot anticipate. And on the domestic side, I think monsoon is an evergreen risk for India every year. I think we begin our year with the talk of monsoons, although I think, as Dr. Bhalla was rightly pointing out, I think the impact on agriculture has got somewhat muted. Otherwise, I think with so much agriculture, so much climate-related vagaries, I think agriculture has done extremely well in the last 3-4 years. So I think apart from that, the other, I think, risk could be that I think you become more. I think the expenditure shifts towards consumption, freebies, etc., particularly at the subnational level. I think that would not be good from a medium-term perspective. It may perk up growth in the short run, but I think consumption expenditure is known to be more inflationary, and it doesn't raise the productive capacity of the economy. So these are some of the risks that I think we need to watch out for.
Also, what can we expect the RBI to do next week?
Well, I think we expect a pause, and they will maintain the stance. So, and then the rate cut probably will happen in the first quarter of next calendar year, which is January to March quarter.
Okay, Aditi, what are the risks that are, that according to you, that the Indian economy should be very mindful of at this point, and your assessment of what the RBI could do next week?
I'm not going to repeat the stuff that we've already talked about. I'm just going to highlight another risk, like how monsoon is an ever-present, although reducing risk. I'm just going to highlight another risk which is sort of always there at the back of our minds, which is crude oil prices going back up. Out of all the aggregates that we track, I think crude oil prices are possibly the most volatile. And as an economy, current levels are reasonable. We can deal with these. If oil prices come down, that will certainly be a great relief as far as margins are concerned. They'll help push up consumption, etc. But prices could certainly go up as well in the short term for a short period of time, and that volatility is something that we will have to live with going ahead as well. For the MPC, I do think that we're in for a pause without a change in stance. Similar to what Dr. Joshi said, not sure we're going to get any changes in forecast, or at least if we get any changes in forecast from the MPC on growth or inflation, they'll be of a very small magnitude, possibly not in for large changes in their baseline forecast for FY24. And pivot to rate cuts, we think it's going to be pretty far away, sometime beginning to mid of next calendar year is my best guess at this point in time.
Wow. Okay. Thanks so much for that, Aditi, and thank you, Dr. Joshi. Dr. Bhalla, any last assessment that you want to leave us with? Your projections for FY24, you are the data guru, you're constantly poring over data. What is your assessment?
Well, first, constantly poring over data doesn't make your forecast right. Maybe helps in the forecast. But I really, the major point I want to make is that, the global economy is moving towards a much better place than it has been over the last 3 years. I do recognize, as Joshi has pointed out, about the Russia-Ukraine war. Where it goes is anybody's guess, but all other things being equal, I do think the world economy is going to enjoy rather robust. We've been through a lot of pain over 3 years, and there has to be some kickback in terms of growth, investment, sentiment, all of the above. The different countries will move differently, obviously, but global economy as a whole should improve, and especially economies like India, who are on a very different growth trajectory and have been since the first year of COVID, have been very, very different than the rest. So I think as far as India is concerned, it's the investment story and bringing out change. The rest of the world is always uncertain.
Right. Dr. Bhalla, I also want to quickly ask you about, there was so much discussion and talk about India's post-COVID or during the COVID policies that India followed in terms of the interventions that were made. The world did something like the US economy did something very different from what India did. Do you think after these numbers, it is also a sort of validation for the policies that India followed to contain the pandemic and how they managed the economy?
Yeah, is that to me or?
Yes, that is for you.
Okay.
You
No,
were in the United
I
States
think that's
throughout the pandemic.
yeah, that's a very important point that you make. We came in under a lot of criticism in the first year. And, what I want to point out about the pandemic, where I'm very much against the policy of lockdowns. The whole world maddeningly went into lockdowns. India went into lockdown very early, but the big positive thing about India, which I think has helped considerably, is that we got out of lockdown within 3 months. This is again unprecedented in terms of other economies. Second, that we were very, very careful about not really, pushing the pump or whatever, pump fining, or trying to increase deficit spending beyond all expectations. We were conservative in that. That has paid out in spades. India's inflation acceleration was one of the lowest in the world. So that turned out India's, therefore, the deficit expansion was also very, very low compared to the rest of the world. So I think you're absolutely right. There should be time, whether at the IMF, other international bodies, etc., to recognize that India chose a very different path than what was being advertised, than what was being recommended by all the experts in the world. And I think they should acknowledge that maybe they were wrong and maybe Indian policy was right.
Right. Let me quickly just pose that question to Aditi and Dr. Joshi as well. Aditi, it's because we all know there was so much debate, discussion around the pandemic. Is India doing the right thing? Multiple packages were announced. That's when PLI was announced. So we reimagined Make in India. We pushed manufacturing, and right now PMI data is also out. It is at a 31-month high. So is this also a sort of validation for India's policies to contain the pandemic and to safeguard the economy?
Yeah,
This is
Shweta,
to both of you.
Yeah, I'll go first. I do agree with that. I think the choice of policies that we undertook during the pandemic turned out to be very fortuitous and very well thought out. Certainly, free food was a great way of keeping the economy protected and keeping households protected. And we continued that until things got a lot better as far as economic growth was concerned. And it was a good time to also bring in the PLI schemes and really focus back on manufacturing as well. Even things like our services exports have actually done exceedingly well since the pandemic started. I mean, in the last couple of years, we've seen a great amount of robustness as well in our services exports as well. So I think that is another sector that has done quite well. And agri, of course, despite all the weather-related issues, 4% growth in FY23, certainly a very high growth that we've seen. So to a large extent, we are seeing the sectors either performing well already in YOY terms or compared to pre-COVID, or we have put in place policies that will really help over the medium term in safeguarding the growth prospects in sectors such as manufacturing, where we've seen the PLI schemes coming in. And one more point, I mean, when we just coming back to this year itself, there are a lot of government projects where more than 80% of the investment had actually taken place by March 2023. And given that it's a pre-election year, we do think and hope that there will be a great push to complete those projects very quickly. And that is also something that should really push up the investment growth and protect the investment cycle and help the economy to grow at least 6% in FY24. So it's not that Dr. Joshi and I are not optimistic. 6% growth is a very good growth number given the global context that we're in. So I don't think that either of us is pessimistic by any means.
No, of course not. You cannot be pessimistic today, Aditi. It's not possible. Dr. Joshi, let me get in your thoughts on this. What's your reading? Is this a big stamp of approval on the post-COVID policies that India followed?
Well, I would say that I think on hindsight, the coordination between monetary policy and fiscal policy and both the policies in themselves, I think they were the right thing to do. I think they allowed us to prevent high inflation and also to keep the deficit under check. I think these are all very positive signals and our strengths right now. As far as PLI is concerned, I think what it is doing two things. I mean, this is an uncertain environment. Private sector doesn't come forward very quickly, even though they are capable for investing. So we're seeing investments in sectors like steel, cement, etc. But in other manufacturing sectors where you want to focus, I think the intervention in manufacturing segment is a good idea. And I think what the PLI has done is it has fast forwarded the investments that would have happened not immediately. So it has brought forward, I think, the successes in areas like pharmaceuticals and electronics, etc. But eventually, I think this will create a base for creating an overall ecosystem for production of these things. So I think this is a good start, I would say. And overall, I think as everybody has said, I think the policy mix has been as good as it could be.
Right. Absolutely. It's been a truly good morning, if I were to just say that again. And yes, a spate of good news after a very difficult last few years is a very, very welcome relief for everybody. And we do hope that the private sector feels enthused with these numbers and they put the uncertainty behind them and come forward with the investments. Thank you very much to all my guests who joined us this morning to put these numbers into perspective. And we hope to have you back on Money Control soon. Thanks so much for watching. Goodbye.
Thank you.